Welcome back to Wall Street Confidential. I'm Alex Steele here with Jim Cramer. Jim, I'd love to get your take on tech. What we're seeing is Apple and RIM are bouncing.
Right.
What kind of
Okay,
I've
always said, I mean, even when I started TheStreet.com, that there's this kind of always undercurrent, starting in 96, went to 2000, which is that in every downturn there tends to be bidders underneath for tech. I've never understood who it is other than a lot of momentum mutual funds. There's not that many. We see, by the way, the outflow to mutual funds of stocks is really frightening. But what I see happening is we get this bid, and the bid is usually led by Apple, Research in Motion, and Google. Very interesting that RIM, still up very big for the year, still has the best product momentum. I have never, I mean, I did say here take some profits in RIM, and I want to make this point that I feel very similarly about Google. I mean, I think Google's doing really well relative to other plays, but Google's up big for the year. Anything that's up big for the year, I think is going to suffer some compression here, particularly because I don't think anyone would think that January ad sales are better than December ad sales. So I find the tech rally to be a false rally. Now, I've been saying here over and over again on Real Money TV that I can't find the fundamentals to base this rally that's been going on. And the classic example is an ActionAlertsPlus.com name, Cisco, where John Chambers unequivocally said, and he's always been money in the bank about the future, that business is going to be down 10 to 15%. I think Cisco's right. I think we should take our cue from Cisco. I think that what happened, Alex, is that we got a short covering rally going into Geithner that should not have included tech, that the only aspect of tech that is showing any strength, and you can see this in a Wall Street Journal story today about Best Buy, are smartphones, which again comes back to Apple and RIM, and those ran too far. So I am making an unequivocal call here that the buyers who are taking up tech are going to be wrong. Okay, they're going to be wrong. They've never provided any fundamental analysis for why they should be right, whether it be Intel, which has no momentum whatsoever, whether it be Dell, which has no momentum whatsoever, Cisco, which I like only on a valuation basis. And I come back and I say, that rally should be sold. That rally should be sold.
What about Qualcomm? Because you do own that for
Qualcomm's
Action
cheap.
Alert, so how does that play
Qualcomm's
into
cheap
it?
relative to the others, and Qualcomm's covered by semiconductor companies that don't really understand it. But Qualcomm is, I mean, I want to make no mistake about it, that's a smartphone play. And it's usually not mentioned in the smartphone articles, but that is a smartphone play, as is Skyworks Solution. But I don't want to leave any impressions here, false impressions. I wouldn't be buying anything here. And I'm a seller of tech. Now, I clearly had a thesis of why tech should be sold, but the stocks were telling me I was wrong. I think the stocks are going to tell me soon that I'm right.
Any words on Amazon to wrap up?
I think Amazon's a $27 billion company that could be a $40 billion company because in the zero-sum world where you want to save money, get things for less, Amazon's the player. Market cap is cheap. Obviously, PE multiple, not cheap. Amazon is a place to go below 60.
All right, thank you so much,
Thank
Jim. I
you.
appreciate that. Is the tech trade. And for more, stay tuned for Wall Street Confidential.